Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 30th of August. I'm Daniel Lam, your host for the podcast. Looking at the charts, the one on DXY index really caught my eyes. Most other key asset classes had their ups and downs over the last 6 weeks, but the DXY index had been on a strong, steady uptrend during that time and went up by 4%. Now, when I first graduated, I did not join the financial industry right away. I was a management consultant, and there was this rule called 80-20, meaning you do 20% of the work and getting 80% of the result. Now, if you apply the 80-20 rule to discuss DXY, then you must look at euro dollar, which is close to 60% of the DXY index. Now, the euro dollar has gone from just above 1.12 to currently around 1.08. The technical momentum indicators are signaling potential further short-term downside to possibly 1.0635 and 1.0520. The main challenge the euro area is facing is the slowdown in money supply data, showing weak economic conditions, and hence the ECB is probably unlikely to deliver any hawkish surprise. This, contrasting with the moderately hawkish tilt from the Fed, explains why the euro has been weak versus the US dollar. European data released on Monday showed that the July M3 measure of broad money, which is the sum of M2, repurchase agreements, money market fund share units, and debt securities with a maturity of up to 2 years, that declined for the first time in over a decade. The 0.4% year-on-year drop missed consensus expectations that broad money supply would remain unchanged from a year ago. Now, similarly, narrower measures of money supply showed a deepening contraction. M1 supply fell for the 7th consecutive month, while M2 supply decreased for the 3rd consecutive month. So this money supply dynamics actually reflect the signal from other leading economic variables, such as falling credit demand, tightening credit standards, and weakening credit flows. ECB President Lagarde highlighted in her Jackson Hole speech on Friday that future policy decisions are contingent on 3 criteria: the inflation outlook, the dynamics of the underlying inflation, and the strength of monetary policy transmission. So the August inflation data, which will be released on Thursday, will provide greater insight into the likelihood of a September rate hike. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.